CMHC states that 2022 was a record year for rental rates, having the lowest vacancy rates since 2001. The Federal Housing Agency has stated that purpose-built two-bedroom apartments went up 5.6% to over $1,200 in monthly rent last year. CMHC states this is the largest percentage increase since 1990. It's no wonder the vacancy rates were as low as they've been for some time and rental rates as high as they are because of how difficult it is to obtain real estate in this overall market. Before we continue, I'm Josh Tavares, investor and realtor with the eXp Realty Brokerage. It'd be amazing if you can help us out and hit the like button, hit the subscribe button, and hit the notification to get updates on our newly uploaded content. And if you guys are interested to learn more about real estate investing toolkit course, check the description below. There'll be more information coming out in the near future. Last year's surge in the real estate market saw the lowest vacancy rate in purpose-built apartments in quite some time. The vacancy rate was hit so hard that it went as low as 1.9% compared to 3.8% a year earlier. And there's many different factors we talked about in many of our videos, such as mass migration, the cost of building materials increasing, inflation, cost of living, the mortgage tightening taking place. There's so much happening, making it even harder and harder for people to enter home ownership space, which means the rental market is going to continue to have a ton of demand. CREA, the Canadian Real Estate Association, has stated that December of 2022 real estate was on average going for $626,000, 12% down from a year before. All these factors have made it more and more challenging for renters to find a great unit at an affordable price in the area of their choosing. CMHC states that in 2022, low vacancy rates and high rents were a consistent theme in 2022. This became more challenging for families with lower income to be able to find housing that fit their needs. And the vacancy rate in Vancouver was even worse, with an astounding 1.2% in 2021 to 0.9% in 2022. And for Toronto in 2021, we were seeing vacancy rates at 4.4%, pretty healthy compared to where it is now at 1.7%. Anything for vacancy rates that we're seeing below 2.5% tends to not be very healthy in terms of for finding rental accommodations for renters, but fantastic for investors. Montreal's rental market reached 2.3%, up from 3.7% a year earlier. And Calgary went from 5.1 all the way to 2.74, the lowest vacancy difference since 2014. As you can see at this point, Edmonton is one of the healthier rental markets where even though things continue to drop in the vacancy side, we're starting to see the numbers are a little bit safer than they were a lot of the larger metropolitan areas in Canada. Ottawa vacancy rates are at 2.1% compared to what they were the year before at 3.4%. And Halifax has seen a very stingy vacancy rate at this point in time with a 1% vacancy rate. CMHC states that with the increased demand of purpose-built two-bedroom apartments, they noticed a massive increase in rents going up 9% last year, reaching an average of $1,930 per month. And no surprise, the highest increase in terms of overall rents for two-bedroom purpose-built apartments were of course in the Vancouver and Toronto markets. Rental.ca states that overall in the Canadian market, rents went up over 12% last year to an average of over $2,000, which is about $215 more a month than the average was the year before, with about $1,700 per month. And in terms of the rental market, the affordable space was essential for individuals who were spending less than 30% of their overall income towards rent versus other individuals who are spending upwards of 30, 40, even 50% of their income on rent alone. For low-income individuals, they found it even more challenging to find affordable housing in places like Toronto, Windsor, Kingston, Belleville, and other areas. Now, Quebec was an exception, with 25% of their overall housing stock being affordable to lower income individuals. With inflation, rise of gas prices, the change of the real estate market, higher interest rates, the difficulty with qualifying, it's no wonder why it's becoming harder and harder to find affordable rental units, and why we're starting to notice that rents are continuing to go substantially higher. Vacancy rates are hitting all-time lows, making it very hard based on many factors that we mentioned, alongside with immigration as well. I hope that video was super helpful, insightful, and gives you a full perspective as to why the Canadian real estate market is getting very difficult for renters getting into the market. I'm Josh Tavares, investor and realtor with the eXp Realty Brokerage. It'd be so amazing you can help us out and hit the like button, hit the subscribe button, and even hit the notification bell to get updates on our newly uploaded content. Thanks so much for watching. Take care.